Welcome back to Portfolio Watch, everyone. Now, according to Stats SA's retail sales numbers for March, the country is really struggling to manage the hurdle of a slowing economy, with retail sales increasing at a very sluggish pace of around 0.2%. Retailers employ a large part of the country's workforce, creating a lot of concerns for future employment rates. But joining us to discuss how the retail sector could create profits despite rising operating costs resulting from fuel and electricity hikes is Chris Gilmour, an independent analyst, and via Skype I am talking to Chantal Marx, the head of research at FNB Wealth and Investments. Guys, thanks so much for your time. Chris, let's begin with you because you've got an issue with Stats SA's retail figures. Why?
Number of things, Fifi, for quite some time, for at least the past 2 years now. If you delve into the figures, and particularly look at things like household goods and appliances, you see innate strength in the figures. And yet, if you go back and look at the likes of Massmart, for example, who's one of the biggest sellers of appliances in the country, they've been really struggling. The demand for these goods is really tailing off. Big ticket items are really taking the strain in this very poor economic environment. And I've mentioned this, I've written about it. So it's clothing, footwear and textiles and the household appliances side. I see a disconnect between what Stats SA is putting out and what I'm seeing on the ground on the JSE listed retailers. Interesting
views there. I suppose a further conversation to have with Stats SA about that. But ultimately, let's look at these retail companies on the JSE. As you do say, they have not performed well for a very long time. And Chantal, to bring you in here, who are you picking or are you staying with in this very difficult environment?
Well, I mean, it becomes quite difficult when the sector as a whole is under quite significant pressure, and it's very difficult to see what exactly the catalyst is going to be that is going to make the situation a little bit better or the environment a little bit friendlier. So I guess what you need to start looking at from an investment perspective is what is priced in and which of these companies offer value, even if you are considering quite depressed conditions. So some of the stocks that I think are looking quite interesting at the moment are the likes of Woolworths, where they did the big acquisition in Australia that really hurt them, and they had some real internal issues in their South African clothing business, particularly in ladies' fashion. But there is a story there in terms of helping themselves out and turning the situation around, and the valuation doesn't look too stretched. Similarly, we've had a couple of issues at the likes of a ShopRite, where they actually, in their last financial year, you could call it kind of a perfect storm scenario playing out, where everything that could go wrong basically did go wrong. And the valuation looks compelling at current levels, because ultimately, you're probably not going to see the type of top-line growth support by the economy that you would have expected 5, 6, 7 years ago.
Yeah. Chris, Chantal putting her money in this very difficult environment on the likes of the Woolworths, ShopRite. Do you agree, or do you have different picks there?
Look, ShopRite, I think, as Chantal I think was saying, is anything that could go wrong did go wrong with the company. So from that perspective, it's still a very well-run company. And I think, yes, all other things being equal, one should expect to see a bit of a turnaround. I'm not so sanguine about Woolies. I think in this environment, they are incredibly expensive. I'm talking about the goods for sale in the shop, not necessarily the actual share price here. So it's difficult to see how the ordinary consumer can keep up with those kind of price points.
But I must say, they're doing quite a bit of discounting. I mean, I did my grocery shopping at the weekend, and the deals that were there, I was quite surprised that, when I paid at the end, when I got to the till and they showed me the amount, I was like, wow, for Woolworths, this is quite okay.
No, fair comment. And I think for the past few years, in fact, they have been giving real discounts, real bargains, the 3 for 2 type thing. Very few other retailers are actually doing that type of thing. I'm just saying that the normal price points, if you compare them with Marks and Spencer in the UK, for example, and translate at 18 or 19 rands to the pound, Woolworths are far more expensive than Marks and Spencer for exactly the same type of goods. So what I'm saying is, in this type of consumer environment, I think they've kind of priced themselves out of the market to an extent. we needn't go into the whole Australian side of things. That's been an utter remorse. If you're asking me what I would say, I think Pick and Pay, although it's expensive, it's very highly rated. It's confounded me over the years, but I have to now admit that what Richard Brasher has done has really been to the benefit of the company. So yes, I think it's on the right track, and it's not just the benefit of the severe cost cutting they had a couple of years ago. They are taking market share away from the likes of ShopRite. I would go for that, and I'd probably also go for Mr. Price in the longer term. Not stellar
because they increased their dividend.
Exactly. I think the value proposition that Mr. Price offers is very, very compelling. And again, look, I don't see this economy changing dramatically in the foreseeable future. So therefore, companies that offer that kind of value have to be looked at.
What about Massmart, Chantal? Massmart, I understand right now its market value has been so depleted, it's even smaller than a Dis-Chem on the JSE in size. It's bringing in a new man, a global experience, a Walmart veteran who has got, some experience operating in emerging markets. He's coming to take over from, the CEO who resigned. Do you have confidence that this is the man, Mitch Slape, yeah?
Mitch Slape.
Mitch Slape is the man that will turn things around for Massmart?
Yes, I'm sure a Walmart veteran entering the South African space has a lot to do with Walmart being one of the major shareholders in Massmart and being very disappointed with the outcome of their investment so far. I'm not 100% convinced that a globally experienced retailer is necessarily going to be able to turn the ship around. I think the South African space is a little bit more nuanced, and I think particularly when it comes to their African growth ambitions, they've done quite a lot there as well. And that is even trickier than the South African space. I mean, we'll obviously give him the benefit of the doubt, but in terms of where the company is trading right now and what its outlook is like from a profitability perspective, I probably will not be investing in the company right now, even at this quite depressed rating relative to where it has traded at in the past. I mean, if you consider a forward PE more or less of about 14 times for Massmart, it looks very cheap relative to where it traded at over the last 5, 10, 15 years. But there are other stocks trading at 14 times PEs and 15 times PEs that are a lot more compelling in the current retail environment, and that where you probably don't have to wait for the entire ship to be turned around.
Right. I mean, your view on Mitch Slape, can he do what Guy Hayward, one could argue, wasn't able to do in terms of that Massmart-Walmart deal?
Look, I think Massmart, to a very large extent, has been a victim of circumstances, in the sense that when they first started off, they had problems with the unions. They couldn't really get up and doing the kind of things that they wanted to do. So they've been a bit hamstrung in that regard. But although Mitch Slape has got a wealth of experience in emerging markets, he hasn't worked in Africa before. And the kind of challenges that you meet in Africa really are very, very unique.
Sure.
And whether it's in terms of just trying to get your trucks into certain places in terms of logistics, trying to keep the stuff fresh.
Trying to get money out?
Trying to get money out in terms of, non-tradable currencies, all this type of thing. It's
and the
incredibly
language.
different. Yeah, and you have huge, 2,000 different languages and dialects. So India, I think, it's yes, you have similar types of problems, but not, I think, to the same extent as you have in Africa. So we sit back, I really hope for his sake that he does it. I think a more important point here, though, is that it's interesting that Walmart is putting their man into it. After years of rumors suggesting that Walmart might be looking to exit Africa.
So that shows their commitment to
Looks
the continent
like
still.
they're committed, absolutely.
And I mean, many say that the decision to bring their own man into the continent is a little too late, but it's a wait and see. Chantal, you mentioned at the top of the show that you don't really see a lot of tailwinds for the retail sector, things that could make things better. I don't know, man. There's this conversation that an interest rate cut is back on the table. We have a new president that is appointed a cabinet that is seen as more respectable and capable and efficient, and he's holding them to, performance targets or KPIs. Could this not provide some form of relief for our retail sector if, number one, interest rates are cut, and number two, the new administration is able to prop up the economy somewhat?
Yes, absolutely. I mean, with an interest rate cut, the assumption would be that there would be a little bit more disposable income, and that could go into the retailer space. You could also see more take-up of credit that will also go towards retailers. And then, of course, if there's a return in confidence in the economy, then that could also support these guys. The problem is that these are all could have, would have, should have type scenarios. And at the moment, there's a bit of a trust deficit between consumers and business generally and government. And it seems as if that confidence switch is not really as buoyant as it used to be. It's no longer a case of, okay, cool, I have extra money. Okay, cool, I think government's doing the right things. I'm going to start spending more. I'm feeling better about the future of this country. There seems to be a bit of a trust deficit, and it's as wide as it's ever been. So you might not see that flow come through as smoothly as it did in the past, but that would certainly be a catalyst. One of the things I think will be lacking still in the retail space will be inflation,
Sure.
And that is probably due to kind of subdued demand again, and that could come through if demand picks up. So there really are a lot of coulds, but we'll have to remain cautious in terms of how quickly that will come through.
All right, Chantal, thank you so much for your time. Let us leave it there, telling us that shoulda, woulda, coulda. There's a song by Beverly Knight that says, are the last words of a fool there. I think I just exposed my age, but hey. Thanks once again to my guest, Chris Gilmour, who is an independent analyst, and via Skype we heard from Chantal Marx, the head of research at FNB Wealth and Investments, saying that, it's a difficult sector, but if you're looking to pick up any stocks, might want to take a look at Woolworths, might want to take a look at ShopRite. Chris telling us about Pick n Pay and possibly Mr. Price. That is where we leave it for today. Thanks so much for watching as always. If you have any ongoing feedback, do keep in touch with us by tweeting us at CNBC Africa. Don't forget to join us again next week, Tuesday, same time, same place. That's 7 p.m. Central African Time. It is bye for now.